Hello everybody, and once again welcome to Sinhanomics, the money machine. It's been quite some time. We have talked about the Magnificent Seven and the US stocks, or any stock for that matter. I've been spending quite a bit of time mostly in the creative visualization meditation series. Well guys, I want to start with the AI hype that many of the bears have been talking about or had been talking about. Now this is almost the end of the year, calendar year, and since January there has been a discussion going on between the bears and the bulls of artificial intelligence and Gen AI, generative AI fans. Now the question to ask is, are you still in the camp of AI is a hype, or you have believed that AI is out there for real? Every company in the IT world, or IT segment rather, have been talking about AI. Most of the companies have been talking about it. And nowadays it has become a trend pretty much. When they announce their earnings report, the Wall Street actually watches what percentage of revenue is going to come from that. Well, today we are going to analyze the favorite nvidia stock and the other chip stocks actually. So you will be very surprised to know that nvidia is right now looks like is the cheapest of all. Yes, you heard that right. nvidia is the cheapest of all the chip stocks, guys. And here I'm talking about the big ones. For an example, Intel, which controls almost 68% of the market share in the Intel side, the CPU space. And AMD has the rest of that, 32% to be precise. And NVIDIA is pretty much a market leader in the GPU, graphic processing unit. We all know that. I'm not going to repeat all of that because I have plenty of videos I have made earlier, and many of my regular viewers must have been pretty much up to date with that. Today I'm going to talk about NVIDIA and the opportunity it's giving to the investors right now. Trust me, this is a lifetime opportunity to pick NVIDIA below $500. Guys, the market is a little bit skeptical about that, and I'll cover that a little bit later as well. For many of the analysts or many of the investors, NVIDIA's story looks like too good to be true. How a company can continuously grow for the last 4 quarters at such a rapid pace. And even for the Q4, I think the result will come in January. The result or the forecast has been fantastic. Well, year to date, NVIDIA has given 240% return. Yes, you heard that right. 240% return, guys. And there is further 40% upside on that. And I'll cover a little bit about the analyst's price target there, but on an average the median price is at 640 to 680 range. So pretty much 40% upside out there from today's price or Friday's price at 488 or 490. If you look at the other chip stocks like Intel, that has given 80% year-to-date growth in the price. And AMD, who has created a little bit of the buzz and in kind of attracted a lot of investors, has given 118% increase in the price, guys. Having said that, if you look at the price earning ratio at today's price, the P ratio for NVIDIA is 40x, 40 times. Intel is 50 times, and AMD is at whopping 53 times. You heard that right. You heard it right. 40 Intel, 50 AMD, 53. And even at today's price, NVIDIA is cheaper. And when you look at the forward earning, 2025, NVIDIA is at 25 times price earning ratio, guys. Intel is pretty much at 27, 28 times, and AMD, the most expensive one, is at 38 times. So what happened? What happened to AMD? And you'll remember that they came out with one GPU which is going to come out in 2025 or end of 2024, and actually AMD has actually announced that they will have $2 billion worth of opportunity in the data center space. Guys, $2 billion. nvidia, if they're going to have $80 billion, $80 billion, the market will be disappointed. So you can see the comparison. But guess what? nvidia's share price is pretty much hovering at around 400 to 500 range for the last 2 quarters, because despite the fantastic result, the market is skeptical about it. Is it sustainable? This kind of growth is sustainable. All the other guys, all the hyperscalers are actually getting into the GPU space. Is that going to dilute the market share of nvidia, which is right now at 86%? And then there is some challenges from the China as well. US government has put some restrictions on the China. So nvidia is not supposed to ship any of the state-of-the-art GPU chip to China. And that has a little bit impacted the nvidia's price point. But what about AMD? Guys, $2 billion coming in 2025 versus $80 billion. In 2025, it will be even more than $100 billion. So $2 billion is pretty much a rounding error. And the market got excited and moved the price from $100 to $140, 40% increase, just based on the 2% of the GPU opportunity in the data center space. And nvidia has $80 to $100 billion opportunity in the data center space, guys. Well, the jury is out. It's up to you to decide which is the right stock to buy. Will you buy something which is trading at 53 times the price earning ratio, or you'll buy something which is trading at 40x and has 86% market share? I personally feel it's a lifetime opportunity. It's the cheapest stock, even if you compare nvidia with Apple. Apple's price earning ratio is pretty much at 28 to 29 times. Well, I had covered in details the nvidia earnings report actually, but I'll just very briefly touch base on that just to remind you for some of my new viewers who have not seen that. So nvidia revenue actually tripled to 18.1 billion versus 16.18 billion that was expected, and that was 206% growth year over year, guys, in the last financial quarter. The non-GAAP earning per share was around $4.02, and versus $3.38, $3.38 expectation. And there was a record data center revenue of $14.51 billion. That was 41% sequentially quarter over quarter growth and 279% growth year over year. From any standard, this company looks fantastic to me. If you look at the net income, $9.29 billion and $3.71 per share, that was the EPS, versus $680 million, that was 27 cents per share a year ago. Guys, from $680 million to $9.29 billion net income, and that's why the market is skeptical about it. Can this kind of growth be sustainable? In my opinion, may not be all the time for next 10 years, but hey, till the market share is there, 86% market share, I think it should be fine. If you look at from the market cap perspective, it is already pretty much at $1.3, $1.4 trillion. Well, just to reiterate and give you the idea that why the stock is not performing as it should be, as I told you, many of them think that is too fast growth, and people have doubts about the sustainability of this kind of fantastic result. Well, stock market always rides the wall of worry, and this is a good sign, guys. We don't want the stock to jump to $600-700 all of a sudden and then to drop later. So it's better, it's moving a little bit slower. Again, as I told you, US export restrictions for China, that will have a little bit of an impact in the Q4, which they are going to actually announce in January. Having said that, Jensen Huang has said that that is kind of pretty much offsetted by the demand coming from other countries, the countries like India and other European countries, etc. Again, the hyperscalers have are pretty much in the race of creating or manufacturing their own GPUs, and many analysts think that that will little bit impact the market share of nvidia. Right now all of them are actually purchasing from nvidia, like Tesla and Google, AWS, Amazon, all of them are purchasing from nvidia. If they will have their own GPU, of course there will be slight dent in the market share, but I think personally that it will take some time, maybe 5 years time. Well, from the outlook perspective for the Q4, nvidia has given revenue expected at around $20 billion, $20 billion plus minus 2%. And from the GAAP and non-GAAP gross margin perspective, the GAAP margin is 74.5%, non-GAAP is 75.5%, guys, plus minus 50 basis points. So even for the Q4 result, the outlook has been fantastic. Well, before I end this, let me tell you the stock price targets. The highest target is still at $1,100. Yes, you heard that right, $1,100 by Rosenblatt. The median hovers at around 642 to 650, and Wedbush analyst Dan Ives, he has a price target of $680. So on an average it's $666. And these prices actually offer a lifetime opportunity for the investors to accumulate at this price range, which is less than 500. Well, with that I'll end my analysis today. So you saw that you can compare between AMD, Intel and nvidia, and the ball is in your court to decide. nvidia is the cheapest stock right now from forward price earning ratio perspective. Well, if you like this kind of analysis, don't forget to like, share and subscribe. Remember, you should take the advice from your financial advisor before making any investment decisions. All these analyses are for education purposes and entertainment purpose for you. Education purpose for the guys who are already into the market, and entertainment for those guys who are sitting at the side and watching this stock to go up and up. Well, Synanomics is out there to create financial awareness so that you can understand the companies you want to invest in, learn how to analyze those stocks and make money. With that, I'll come back again with some interesting analysis, maybe for some new companies like Salesforce.com, Adobe, etc., because they are doing great work in the AI space and their future is looking fantastic. Till then, it's a goodbye from your finance coach, Pankaj Sinha. Bye-bye.